Earnings season is underway. We just finished talking about some of the banks, the big money center banks that reported last week. We have a big names on deck this week. Our panel is ready. Jed Ellerbrook, Portfolio Manager, Argent Capital Management, and David Bush, Co-Chief Investment Officer at Chang'an Wealth. So, David, I'll start with you. Some of your thoughts on this week.
Yeah, well, first of all, thank you for having me. So there are two sectors that I'm watching closely. One is tech. So we have earnings releases from IBM, Tesla, Netflix, so large cap growth, large cap tech. And then I'm also delving into the regional bank space. And that's really I'm using the regional bank space as a barometer of the health of the economy.
All right, Jed, what do you think here? I mean, are you watching some of the brand names here? What names might stand out to you this week?
Yeah, I'm looking forward to seeing Blackstone. I believe it's Thursday morning. Kind of the same reasons as the previous guest articulated, a few concerns in the market about credit these days. The alternative investment management stocks have been pretty weak over the last couple of weeks on fears related to credit worsening. And I think that those fears are unfounded, and Blackstone's going to report good numbers. And I hope the stock appreciates. And then also, second group for me, healthcare, the bioprocessing companies, Thermo Fisher and Danaher, they report Wednesday and Tuesday morning. And I hope to see continued recovery in bioprocessing demand. And then there's some hope that tools revenue growth is going to accelerate here over the next year as all these drug manufacturers start to onshore their activities.
Right. Those are some, I mean, obviously, we've heard from BlackRock and Blackstone, as you noted, is this week. You talked about Thermo Fisher and Danaher, and there are some others that are certainly very widely watched, like Netflix and Tesla. Did you have some thoughts on those, David?
Yeah, so with the large cap tech space, really what I'm looking for is capital plans, right? So capital expenditures and the monetization of this new AI technology that we have. So in my mind, there's going to be a massive build out for things like data centers and the infrastructure that's required to support this AI build out. And so the question becomes, will those capital expenditures lead to that monetization of AI, cloud computing, and so on? And that's really the big question that we're watching for.
United Rentals was also on your list. Jed, tell me more.
Yeah, United Rentals is a longtime favorite of Argent Capital. It's a great read on U.S. construction activity, primarily non-residential construction. They're the leading vendor for mega projects around the country, which have been super strong. Data center construction, a lot of advanced manufacturing, warehousing, etc. So that part of their business has been strong. The weaker part has been smaller job, local market activity. Higher interest rates has restrained that activity here in 2025, but there are hopes and expectations of a rebound in 2026 because interest rates are heading down, and I think there's some pent-up demand there. So I'm looking for accelerating revenue growth from United Rentals, and I think they'll report a good third quarter, and it wouldn't surprise me if they inch up their guidance a little bit here for the rest of the year.
David, you think the takeaway from this quarter is going to be a good one?
I think so. I mean, on one hand, we're seeing some pretty solid results from those that have already reported. The one area that I'm most concerned with is credit quality, specifically in regional bank loan books. And the reason is because last week we saw Zions and Western Alliance both report that they were subjected to potential loan fraud, and it caused the rest of the regional banks to sell off last week. Now, what we're seeing there is some, potential for credit deterioration, and that's what I'm concerned with. And will it bleed into the other sectors or to the other regional banks? And so this week we have Zions, Western Alliance, we have Cadence Bank. So several of the larger regionals are announcing their earnings. So I'm going to pay close attention to credit quality as well as margins.
And Jed, what have been some of your favorite names this year that you saw good earnings, or you mentioned that you think earnings could be revised higher going forward too?
Yeah, I think the big tech group, which mostly reports next week, Google, Microsoft, Amazon, I think Meta, as well. I think you'll see them report good results. I think their CapEx projections are going to continue to be revised higher. I think their earnings are going to be strong. And I think estimates will be revised higher for that group. So I expect big tech to continue to lead the S&P 500 higher.
And what about the big picture, whether it's economic indicators or the government shutdown or labor or inflation? David, do you think that any of this can really dampen the market or some of these earnings? Because right now we're right around highs and people are still feeling pretty good.
Yeah, no, that's a great question. And really what we're seeing is with the government shutdown, we've had less data coming out. And so when we think about the Federal Reserve and the key metrics that they follow, how are they going to be able to observe, inflation, unemployment, GDP, and so on with the government shutdown? And so when we look to banks and other data sources for the health of the economy, I think that kind of gives us a little bit of a preview of what we can expect. So if we stay on this path where the front end of the curve gradually comes down, the Fed lowers interest rates, and we have a positively sloping curve, I think that's going to be a great tailwind for large cap growth, large cap tech specifically. Lower rates will benefit them. At the same time, we do want to be mindful of credit deterioration within both the consumer and commercial borrowers.
All right, Jed Ellerbrook and David Bush, thank you so much. Jed and David, thank you. Wonderful to see you.